Let us see our next question. A company is considering to engage a factor. The following information is available. The current average collection period for the company's data is 90 days, 90 days, and 1 by 2, that is 0.5% of the data's default. Factor has agreed to pay money due after 60 days. That is, factor has given an assurance that I will make payment in 60 days and will take the responsibility of any loss on account of bad debts. Annual charge for the factoring is 2% of the turnover. Administration cost saving is likely to be 1 lakh per annum. Annual credit sales are 120 lakhs. Variable cost is 80% of the sales price. Cost of borrowing is 15% per annum. Assume that there are 360 days in a year. Should the company enter into the factoring agreement? That is a question. Let us have understanding that what sort of information is provided over here to us. Dear students, over here we introduce that is we are going to understand a new concept that is called factoring services. We have been provided with the information that there is an in-house management of the receivable that we have. In-house management of the receivable means we are managing everything on our own, and we are that is considering the factor to be appointed. At this point of time, we can have a simple understanding at this point of time. Of course, I am going to discuss it further. Let's say we are appointing a collection agency who will look after the collection work of the company. We have been provided with the information that average collection period is right now 90 days. So we are able to get the collection from the receivable for that is after 90 days. And percentage of the bad debts is 0.5%. That is 0.5% of the data's default. The factor, if at all we appoint, he has given an assurance that I will make payment in 60 days. Factor is basically a professional agency who is having the whole time work of the collection only. So the factor has given an assurance to us that I will reduce the collection period for you, and this is the first advantage that we will have with the appointment of the factor, and will take the responsibility on account of the bad debts. So once we appoint the factor, we will not have the loss on account of bad debts. Dear students, in technical language, it is given a name as the non-recourse factoring services. In technical language, it is given a name as non-recourse factoring services. We understand with that, the factor is responsible for the bad debts and we are not responsible for bad debts. That is what we understand. If at all the question is providing the information that it is recourse factoring services instead of non-recourse, there is another factoring services called recourse factoring services. In that case, what will happen? The company will be responsible for bad debts. So the bad debts expense will be there even if you appoint the factor. Okay. Next, the information is provided to us that annual charge for the factoring commission is 2% of the turnover. So percentage of the factoring commission it is 2%. Basically, we understand that nothing comes free of charge. Whatever the services which the factor is giving to us, for that the factor is going to charge a commission. It is at the rate of 2% of the turnover. Administration cost saving is likely to be 1 lakh per annum. So administration cost savings is an amount of 1 lakh. What is the existing administration cost is not given to us. However, if at all we appoint the factor, it will reduce by 1 lakh. like that information is given to us. Annual credit sales is an amount of 120 lakhs. Variable cost is 80% of the sales. Cost of capital is 15 percentage. 1 year is equal to 360 days. And based on that, say we are required to take a decision that whether to appoint a factor or not. The question does not provide the information what would be the sales once you appoint the factor. So of course we will make an assumption that the sales value is going to remain same, that is 120 lakhs. And of course the variable cost to sales ratio is remaining same, that is 80%. So from this set of the information, we are required to decide that whether to continue with in-house management of the receivable or to appoint the factor. Apparently you can understand that say there is an advantage of the reduction of the carrying cost. Why? Because the collection period is reduced. There is a savings of the bad debts. There is a savings of the administration cost. These are the three advantages that you have. And against that, say there is a cost of appointing the factor. So we are required to make a kind of balance between both of them to decide whether to appoint the factor or not. Everybody go through the question, then we'll discuss how to solve it. Now I want somebody of you to tell me that for the purpose of decision making, can we go with the method number 1, total profit or loss approach, or we can go for the third method, that is total relevant cost, because the second method is always applicable. So can we go with the first method or third method or not? I want you to tell me in the chat box. So friends, over here we can apply first method. Why? Because existing sales is given, yes. New sales is given, yes. Cost information is given, yes. So method number 1 possible. Method number 2 is always possible, incremental approach. Third method is possible. Why? Because the sales value is same for both the options. So coincidentally, this is a question that you can do by all the three methods. I am doing it with the method number 1, that is the total profit or loss approach. Please write an answer. Decision making by using total profit or loss approach. In that rundown, step number 1, calculation of total fixed cost. In that rundown, ignore. Step number 2, calculation of variable cost to sales ratio. It is 80%. Step number 3, calculation of the profit or loss for in-house management of receivable, comma, for factoring services. In that write down, assuming that present administration cost is rupees 1 lakh, comma, answer is calculated. Full stop. In bracket write down, we can assume any amount greater than equal to rupees 1 lakh. So friends, over here the question is basically providing the information that once you appoint the factor, your administration cost will reduce by 1 lakh, like that information is given. So the question is basically not providing the information that say what is the current administration cost. Hence I made an assumption that present administration cost is 1 lakh. Making assumption for any other amount is also acceptable, is also valid, but you cannot make an assumption for the administration cost right now less than 1 lakh. Suppose you make an assumption that say right now it is 1,70,000, then in that case it is wrong. Then in that case it is valid. Why? Because presently it is 1,70,000 and afterwards it will be 70,000. If at all you make an assumption that say right now it is an amount of 4 lakhs, then presently 4 lakh, after appointment of the factor it will be 3 lakhs. If at all you assume that say right now the cost is, let us say, 75,000, then in that case it would be difficult to write the answer in proposed. That is the reason say you have to make an assumption of 1 lakh or greater than that. So I have made an assumption of 1 lakh. Now friends, we are required to compute the profit or loss for both the options. One is in-house and another is the factoring services. I request all of you to make the computation for in-house management of the receivable, the working on your own, and tell me answer. Then we'll do the factoring. That is also, for that I'll give time to you. But first of all, do only in-house management of the receivable and put your answer in the chat box. So let us have understanding that say how to calculate the answer. First of all, we will mention the existing sales. Existing sales is 120 lakhs. Variable cost is given to us friends as 80% of the revenue. So 120 into 0.8, that comes to 96 lakhs. Next is the carrying cost. Presently the collection period is 90 days. So what will happen? 96 lakhs upon 316 into 16 into cost of capital, which is given to us in the question as 15%. So over here 96 lakhs into 16 into 0.15 divided by 316, that is 2,40,000. We have made an assumption that right now the administration cost is 1 lakh. If at all you have made some other assumption, then accordingly you will write, but not less than 1 lakh. Next will be bad debts. 0.5% of the customer's default. That comes to an amount of 60,000. Right now the factoring commission will not be there. Why? Because we have not appointed the factor. All expenses will be deducted from revenue. 96 lakhs plus 2,40,000 plus 1 lakh plus 60,000. Friends, right now the collection period is 90 days. I'm sorry. Right now it is 90 days. So 96 lakhs into 60, sorry 90 into 0.15 divided by 360. So it is 3,60,000. Okay. So now 120 minus 96 minus 3.6 minus 1 minus 0.6. So there is a profit of 18,80,000. So right now there is a profit of 18,80,000. We are required to do similar working once we appoint the factor. I request all of you once again to make the computation what is the profit or loss once you appoint the factor. Calculate the answer and put your answer in the chat box. So let us see, once you appoint the factor, then what will happen? Sales of the company is going to remain same, 120 lakhs. Because in absence of an information, we make that assumption. Variable cost is also going to remain same because there is no change in the sales value. Carrying cost, it is 96 lakhs divided by 360 into 60 days into 0.15. That comes to 2,40,000. Administration cost will reduce by 1 lakh. Right now it is 1 lakh, so later on it will be 0. Bad debts will be 0. Why? Because it is a non-recourse factoring services. Factoring commission, it will be 120 lakhs into 2%. That comes to 2,40,000. That's it. So use your calculator. 120 minus 96 minus 2.4 minus again 2.4. So there is a profit of 19,20,000. So we understand that say profit increases with the appointment of the factor. So the factor should be appointed. That is the way we are required to write one line answer. So write down one line answer. Decision. Appoint factor, comma, because profit increases. This is the way we are required to write the decision. So small summary of the working. Step number 1, fixed cost that we have to ignore. Step number 2, variable cost to sales ratio, it is 80%. Step number 3, profit or loss in in-house and factoring. Everything is simple, just administration cost is slightly a point for which you have to be careful. Now number of times students are having a point to tell me that sir, if at all we do the same question with the total relevant cost approach, then what would be the change? My reply to them is very simple. Let's say you just ignore this 120 remaining are cost. So you make the computation of the cost. What is the existing cost? The existing cost is an amount of 101.1 lakh. I'm sorry, 101.2 lakhs. And once you appoint the factor, it is 100.8 lakhs. So there is a cost right now 101.2. There is a cost later on 100.8, and later on the cost reduces. So you should appoint the factor. That is the way you can have the simply decision if at all you go with the total relevant cost approach. And one more thing, that if at all a student is having a point that sir, if at all I adopt the incremental approach, then how will I show answer? Step number 1, total fixed cost, you have to ignore it. Step number 2, variable cost to sales ratio will remain same, 80%. In step number 3, you are required to compute the savings in the carrying cost. In case of the 90 days time period, in case of 60 days time period, You have to make the comparison of the carrying cost. It is 3,60,000 and it is 2,40,000. So the carrying cost is reduced by 1,20,000. That is the way you'll have the step number 3, savings in the carrying cost. Then step number 4 would be like this. Savings in carrying cost 1,20,000 plus savings in bed debts 60,000. That is 120 lakhs into 0.5 percentage. Savings in administration cost 1 lakh. You don't have to write any assumption that say what is the present administration cost. These are the 3 advantages minus you have to incur a cost, and that is the payment of the factoring commission, that is at the rate of 2%. So use your calculator. 120 plus 60 plus 100, that comes to 2,80,000 minus 2,40,000. So it is 40,000 rupees is what's the profit on appointment of the factor. And you can see that the difference of these two is also exactly 40,000. This is the way we are required to say make the computation in case of the incremental approach. So this is the way we are required to say right answer.